McDonald's may not be McLovin the latest customer trends, despite reporting better than expected U.S. same-store sales growth of 2.4% for the third quarter. The fast food giant CEO Chris Kempczinski is still warning of a pullback in spending from low-income diners, even though it's still offering extra value meals, which accounted for 30% of U.S. transactions. And he's not the only one sounding the alarm. Mediterranean restaurant chain CAVA did cut its full-year forecast for same-store sales growth to a range of 3 to 4%, below the previous range of 4 to 6%. CAVA says younger diners between the ages of 25 and 34 years old are visiting its restaurants less frequently as well, as that demographic faces higher costs and higher unemployment rates. But can the new cinnamon sugar pita crisps lure them back in? Joining me now live in the studio is CAVA Group co-founder and CEO Brett Schulman.
It's good to see you again.
It's great to have you too, Brett. So the pita chips, you got to keep innovating no matter what is happening in the economy, correct?
Yes, that's what excites our guests. We know that they love innovation. This quarter, we have our new chicken shawarma protein. It's a spit-roasted, juicy chicken breast marinated in our proprietary shawarma spices. And then, as you mentioned, our fan-favorite pita chips. Our classic pita chips are craveable. People love them. So we've made them a flavor platform, and our most recent flavor innovation is cinnamon and sugar, and we got that side of honey for dipping.
Oh, a side of honey for dipping. That sounds very Greek. Is that what you're doing now? It's really kind of still maintaining the profile of what you began with as such a success and just expanding the menu?
Yeah, it's rooted in the culinary and heritage of my co-founders, all sons of Greek immigrants, really bringing the simplicity and the healthful flavors of the Mediterranean and bringing our modern American spin on it and bringing it more accessible to consumers across the country.
Tell me what you are seeing with that younger demo, because there is a belief that we do have a split economy. The high end is doing very well, continuing to buy, continuing to pick up all kinds of consumer discretionary items, and yet the middle to lower is actually suffering. I just want to know what you see on the front lines.
Yeah, so for CAVA specifically, we've actually been growing market share significantly. On a two-year basis, our same restaurant sales accelerated from Q2 to Q3, from 16.5% to 20%. On a one-year basis, they waned a little bit, 1.9%. What we've seen versus last year is that moderation of that 25 to 34 age group that you noted earlier is that they're facing different headwinds this year, more significant headwinds, whether that's student loan repayments, whether it's increased housing costs, other inflationary pressures around them, healthcare costs, and then the unemployment rate that's had them peel back a little bit on their visitation.
Interesting that you bring up student loan repayments. There's news today that says that there are some student loan defaults that are mounting. So clearly that seems to be squaring. It's not that you're losing them to some other chain, right? It's not that they're going to a Sweetgreen or some of these other fast casual companies?
Yeah, no, we've actually grown our wallet share, our market share with that guest segment. It's just their same restaurant frequency visit year over year has moderated a bit with us.
You opened 17 new restaurants during the quarter. Your total now 415. Yeah. That's a nearly 18% jump year over year. So I'd love to know what you are planning to do in the current quarter. Have you slowed any of that build out?
No, in fact, our new restaurants have opened at record levels. We've noted $3 million plus tracking annual unit volume. So we've seen this Mediterranean cuisine have just unbelievable receptivity no matter what market we open in. And we maintained our guidance for this year, 68 to 70 total net new restaurants this year. And we gave guidance for next year of at least 16% compound annual unit growth rate.
We got a little bit of a window into what might be happening with the fast casual space when Chipotle, Mexican Grill, they really took a hit with their stock when they announced that they were having the same type of difficulty. So is there anything you can do to fight that? I mean, obviously with the tariffs, it's more of a do we raise prices, but would you consider tweaking your prices?
Well, this is a very intense discount promotional environment, the most intense since the Great Recession.
Really?
In fact, 30% of all restaurant transactions were tied to a discount or a deal in the last 12 months. But for us, we've tried to improve our everyday value proposition each and every year we've been in business. And when you look back to 2019, we've taken less than half the aggregate price increase, less than 17%, compared to industry peers, where on average they've raised prices 34%. And CPI has gone up about 27% during that time. So we've underpriced inflation by 10%. And that's what we're going to keep doing next year and the year after to make our relative value proposition more accessible.
That's interesting, because that is what some of the analysts say would be an earnings risk, is the cost of rising food prices, but you are already working to mitigate that. When you debuted, and I have to ask about the stock, because when you debuted on the New York Stock Exchange, it was June 15th of 2023, you were priced at $22. The stock is double that now, but back in December, you were at an all-time high of $150 a share. That's a huge haircut, it feels like. To what do you attribute? And I know you as the CEO, you don't look at the day-to-day moves, and you can't control the markets, but you can control maybe the messaging?
Yeah, well, look, I mean, I think, as I tell our team, the stock's going to go up, the stock's going to go down. If we focus on our commitments and what our long-term strategy is, that stock will go up and to the right over the long term. And, stocks will get ahead of themselves. They'll go lower than they should. It's just us delivering on our commitments and our long-term strategy. And the market will apply a multiple to it depending on what economic growth looks like, what the comp momentum is like. And we just got to keep our heads down, focus, and control what we can control.
Okay, final question. Which state are your stores doing best in?
Well, that's the beauty of our food and our brand and our proposition, is we're seeing consistent performance across the country, whether it's the urban markets or the suburban markets, whether it's the Northeast, the Southeast, the West. We're seeing consistent performance, and even at lunch and dinner. Over 46% of our occasions are at dinner, and over 87% of our restaurants are in the suburbs. So great diversity of appeal, and that just speaks to the white space opportunity we have in the 28 states we operate in today, or all those states that we don't currently operate in.
I was hoping you'd say New Jersey.
We need more in New Jersey. New Jersey's a great state for us.
Good to hear. All right, good luck, Brett.
Yeah, thanks, Liz.
Thank you very much. And after the show, we are all going to dive into the cinnamon pita crisps.
Sounds like a plan.
Thanks.